So, what can the odds makers in Las Vegas teach us about the stock market? Hey, it's Dean Barber, CEO of Barber Financial Group. I'm going to show you some really strange similarities to what the odds makers in Vegas were thinking versus what the stock market was doing in the month of January. All right, before we get started, I want to make sure that you give us a thumbs up here on YouTube. Make sure you subscribe and click the bell icon. That'll allow you to follow us and allow you to get immediate notifications every time we launch a new video. All right, let's have a little bit of fun here. All you Chiefs fans. I'm a Chiefs fan. Didn't go to the parade. In fact, the day that I'm recording this is the day of the parade. But hey, go Chiefs. What a Super Bowl. My first chart I want to show you is from the odds makers in Las Vegas, talking about the probability of San Francisco winning the Super Bowl. Let's check it out. So if you go through here early on in the game, you can see the Chiefs had their lead. The odds of San Francisco winning were well below 50%. They take the lead. And with just 7 minutes and 43 seconds left, we're at 95.3% chance that San Francisco is going to win the Super Bowl. What happened in the last 7 minutes and 43 seconds? Well, it's history. Kansas City scored 21 unanswered points to win 31-20. Yes. All right. But look at what happened. This odds chart just tanks down here, right? There's no way that San Francisco is coming back with 2 minutes to go. What does this have to do with the stock market? Well, for about the first 21 days of January, the stock market looked an awful lot like the odds of San Francisco winning. The markets were going up and up and up and up and up. And then the coronavirus scare comes in and sends the market falling. Check it out. We'll do our best to lay these charts on top of one another here. Here's the stock market. I'm going to take off bonds for just a minute. But look at the stock market here in January. Up 3% all the way to January 20th. Had a little bit of a comeback here. And then all of a sudden, we just come crashing down. And the Dow Jones Industrial Average was off to such a great start, but winds up being down just under 0.9% for the month of January. Now, you can have a little bit more fun here and say, well, what if we thought that the Kansas City Chiefs were the bond aggregate, okay? And what if we thought that the stock market was the San Francisco 49ers? Check it out. We have 7 days left to go to the end of the month, and stocks are winning. So you might just say, gosh, any bonds I own, I ought to just get them out of my portfolio. And then what happens? Again, the coronavirus scare comes in, markets lose, bonds take off. The bonds in the month of January, they're the Kansas City Chiefs. Stocks, they're the San Francisco 49ers. So that first chart I showed you, you might get excited about that if in fact you're a Chiefs fan, but you might not get too excited about it if you're a San Francisco fan. In fact, you might be really, really disappointed. Why would you be disappointed? Well, because you didn't own any stocks. You got to make sure that you've got a balanced portfolio. You got to make sure that you got things in there that can do well through all different types of economic cycles. Let's spend a little bit of time talking about market valuations, where are we at today? And one thing comes to mind. And if you haven't paid attention to this in the news, well, you may have been sleeping. So I'm going to pull up a chart of Tesla for the same month, January. 55.52% gain on Tesla. Now, all the analysts are saying they got a price target on Tesla of, guess what? $300 a share. Wonder what Tesla is right now. Tesla at the end of January was over $800 per share. And you know what? They're not as big as General Motors. They're not as big as Ford. They're not making money. This reminds me so much of what we saw in the tech bubble in 1999. And I'm going to tell you that's driven the NASDAQ so far to some unprecedented highs. Let's compare the NASDAQ here to Tesla. All right, so there's the NASDAQ up 3%. So Tesla's in the NASDAQ, but it buoyed a lot of that growth in there. It's kind of strange. You look back a few years and you had Apple trading at about $12 on a price to earnings ratio. Apple today is trading above $25 on a price to earnings ratio. Look at companies like Procter & Gamble that have historically traded somewhere between $15 and $21, $22 on a price to earnings ratio. Procter & Gamble now up well above 30, AT&T above 40. Stocks are historically expensive. Stocks are historically expensive, and so anything like the coronavirus, anything that can spook the markets, knock them off their kilter, will actually do that. And you start to see this volatility that we've seen come back into the market. Now, first few days into February here, things look a lot better. It's as if the coronavirus scare is completely gone. Trust me, it's not. I anticipate that we will continue to see volatility through the month of February, maybe even into the month of March. I think from an underlying economic perspective, things look great. New jobs report, January, the best monthly gain in over 5 years, 299,000 jobs added in the month of January. Interest rates still at historic lows. So there are some positive things out there. But the point is that the markets are overvalued. So when you get things that, like the coronavirus or something that's kind of outside the norm, it can tend to bring some volatility back into the market. The key here is you don't panic over these short-term gyrations. We still want to make sure that we're looking out for longer-term trends, things that could actually do some real damage to the market, not just a pullback of 5 or 10% or something like that. At any rate, I encourage you, always, keep in touch with your advisors here at Barber Financial Group. Come in, sit down, talk to us. Let's go through your portfolio. Let's understand what you own. Let's make sure that you have the right things within your portfolio and that it fits to your overall financial plan. With that, I'll say one more time, go Chiefs, and I'll talk to you in about a month.